Right, guys, yesterday we had the briefest of introductions to financial maths, and we're continuing this today. In your book, this is called Applied Arithmetic, but really it's all about things like taxes, investments, salaries, and all of that is covered here in this particular chapter. Now, this is uploaded on Google Classroom. It's Active Maths 1 and it's page 337. This particular page I recommend you reading before you attempt the questions today, just to give you a general understanding about how salaries work in Ireland and wages work in Ireland, which is what we're looking at today. So I'm not going to read that myself, but I'm just going to walk you through the main things you should know. In Ireland, you either earn a wage or a salary. A salary is paid over usually for a year. Okay, so for example, a teacher's salary will be something. A starting salary is €37,692. Okay, for a TD, I've also worked it out here, which is €98,113. Okay, so about three times there, maybe two and a half times the salary of a teacher. All of this money, unfortunately, does not go into the bank account. Okay, all of this money has to be taxed. Okay, and this is what we want to study today, something called pay as you earn, which is PAYE. If you're not earning a salary, then maybe you're earning a wage, and it's the same story. A wage is usually something that's more weekly, and it's based on the number of hours. Oftentimes, that's how it works. Now, in terms of the salary I just mentioned there, a starting salary of a teacher, €37,692. As I said, most of this is, it doesn't all go into your bank account. So at the end of year one teaching, you don't get €37,692. What you do get, though, is money after deductions have taken place. So if I was to talk about that salary there, I would call that gross salary, gross income. Okay, and what that means is the gross salary of a teacher being €37,692. That is money earned before deductions have been made. So what deductions would a teacher or any other person expect to pay on that money? Well, they'd expect to pay as you earn, which is the standard tax on incomes in Ireland. Okay, so this is called PAYE, as I just said. There's other charges as well. There's something called universal social charge, which is something that was introduced a few years ago, which is something that all people have to pay. That's why it's called the universal charge. And you also have pay related social insurance, which is also something, a tax that everyone has to pay. They are mandatory taxes, and that'll take a chunk out of your money. So there's three different kind of taxes by the government: PAYE, PRSI, and USC, which are all taken as deductions from your gross salary. Okay. Now, luckily, though, as I said yesterday, there are ways and means to reduce your tax bill. Okay, so this, if we looked at all of the deductions in terms of tax, we would call this the gross tax. But of course, there are other things, though. There are ways and means to reduce that gross tax. There are something called tax credits. So tax credits basically are this. They are entitlements that a person has to reduce their tax bill. So if you, and I'm sure in a few years' time, you will be joining the revenue system, and on that you will find that you might be entitled to. So everyone is entitled to a standard tax credit when they're working of, I believe it's like €1,300 or something like that, which will reduce your tax bill. But there's other things, other tax credits, so depending on your circumstance. So married people are entitled to tax credits to reduce their tax bill, for example. If a person happens to have a visual impairment, and they can apply for a blind person's tax credit. And there's other ones as well, of course, like for example, a single parent tax credit. All of these, when you deduct them from your tax, will reduce your tax bill. So once you've reduced your tax bill, we call this gross tax. We call this tax payable. So tax payable is your gross tax minus your tax credit. I think the best thing to do to understand this is put this in context with a few questions. So we're going to look at a few questions right now. We're going to start here with a question here. And the first question here states, 21.1, calculate the gross tax for each of the following. Okay, now when you're doing these types of questions here in the book, you need to ask yourself questions before you start. Do I understand what I'm being asked to work out? What does gross tax mean? Gross tax is, so if we're talking about this is income tax, this is going to be gross income tax. So what this is basically the amount of tax that you're charged before deductions have been made, so before the tax credits have been used. So you can see what they've done here. The standard rate of tax in Ireland, as I mentioned yesterday, is 20%. So it's about 21% really, but 20%. So if I want to work out my gross tax, my gross income tax, what I do here is I take my salary, my gross salary, and that's 25,000 euro in this situation, and I multiply that by the tax rate to figure out how much of that income is going towards gross tax. So they said 25% or 25,000 multiplied by 20%, and you get 5,000 euro. Now you can multiply by 20%. We can see here that they multiply by 0.2, which is basically the same thing. So that is how I answer these following questions here. I am asked here to work out the gross tax based on these different percentages. So you probably have an idea here how to do the first one here, which is 1b. What you do is you take 18,000 euro and you multiply by what? 18%, and that will give you the gross tax. Okay, so I'm not even going to bother working that one out because that's a very easy one. Looking at the second one, it says calculate the tax payable. Okay, tax payable, remember, is once I have worked out my gross tax, which is my salary or wage multiplied by the tax rate. Okay, that's my gross tax. Then I can use my tax credits to reduce the tax bill I'm paying to the government, and that will become the tax payable to the government. So let's look at the first example again. We have 25,000 euro is this person's gross salary. They are taxed at 20%. So that's 20%. So they have 20% is basically a fifth. So what is a fifth of 25,000? It's 5,000 euro. Now this person is entitled to 1,800 euro of tax credits. So this 5,000 euro, subtract the 1,800 euro and you get your tax payable, which is 3,200 euro. Okay, so let's have a look at another question here, and I'm going to come up with one myself. Okay, so let's say for argument's sake, again, a person's salary here is 30,300 euro. Okay, so that is their gross salary. What does that mean? That is before deductions have been made. They are getting 30,300 euro. So that's what their employer is going to give them. Let's say for argument's sake, this person is only paying, they are paying the lower bracket of tax. So they're paying PAYE tax, okay, and the bracket they're falling under is 21%, okay. So there's something that we'll be looking at shortly, which is called the standard rate cutoff point. If you earn a lot of money in Ireland, so if you earn something like 90,000 or 80,000, the ones I mentioned there, like for example the TDs in the Dáil, they have to pay the higher rate of tax on the income once it's above a certain threshold. That threshold in Ireland, I believe, is about 35,000 euro. So if we just take this person here, then this person here has not reached that threshold, so therefore they're going to pay on the lower bracket of tax. What we're asked to do in this question might be something like this. Work out, so work out, we'll say the gross tax and tax payable if the person is entitled to, we'll say 1,300 euro standard tax credits, plus we'll say blind person's tax credit of we'll say €650. Okay, now excuse the lack of euro symbols there. So, how do we do it? What we would need to do first of all is underline what the key information. So the key information, this is a gross salary of €30,300. That's key information. Standard tax of 21%. Okay, I'm asked to number one, work out the gross tax. Okay, number two, I'm asked to work out the tax payable. And then I have to take into account that there is a standard tax credits of €1,300 and €650 is for their blind person's insurance or blind person's tax credit. So step one, let's work out how much is their gross tax. Okay, gross tax. Well, if this person is earning €30,300, then basically what we do is we take €30,300 and we multiply that by 20%. Oh, not 20%, it's 21%. Okay, so 21% you multiply there. Now, once you multiply that out, well, let's see what value we get. So we have €30,300. By the way, guys, calculators are essential for this chapter. Okay, so I'm multiplying by 21%. And I get €6,363. Okay, now that's €6,363 is their gross tax. They are not going to pay all of that money back to the government, okay, because they are entitled to tax credits. Okay, so the next thing I want to work out is I am asked to work out their tax payable. Okay, so to work out the tax payable, I don't really like the formulas in the book, really, to be honest, because I think you need to understand this to answer these questions. Remember, gross tax is the amount of tax that you have to pay to the government, but this is before the deductions have been put in it. So basically, what you can write down here is deductions. Okay, so you don't have to pay all of that €6,300. Thankfully, you have to work out your deductions. So what you do is you take your €6,363 and we're going to subtract from that our deductions. Okay, so what are our deductions in this? Well, that's what we have to work out. Okay, so is this going to load for me? I would like it to load. There we go, it's a bit slow. Right, so the deductions in this case, basically, if you look at it, the deductions we're taking into account here are a person's tax credits. Okay, basically the tax credits. So I think it'd be a good idea if we worked out their tax credits first of all, don't you? So the total tax credits. So total tax credits. So a person's total tax credits here, in this case, are €1,300, and you want to add on to that €650. Okay, so basically this person here is entitled to €1,950 tax credits. What's that €1,950 going to be used for? It's going to be used to reduce their tax. So €6,363. Subtract off of that €1,950, and you will work out what we want to work out, which is, let me just raise it up there because it's getting in the way. What we want to work out, which is basically the tax payable. Okay, so subtract 1950, you get a value there of €4,413. Okay, and that is basically their tax payable. So we just worked out number two, their tax payable. What do they pay to the government? They pay €4,413. That's number two. Right. So that is how we worked out tax payable. And one final thing then that you're probably wondering then is, say for argument's sake, I was asked to work out the net salary. So what does this person actually get into their into their bank account. So ignoring any other factors, if I wanted to work out the net salary, which again, in simple terms, is basically what does the person actually get in their bank account? Well, what I do is I take my gross salary, which is basically, in this case, it is 30,000. So we have, 30,300 euro. And I subtract from that the tax payable, which is 413, and that's all euro, remember. So once you subtract that, what do we get? Minus 4413. And this person, their actual payment into their bank account on a yearly basis is 25,887 euro. Okay, so that's how taxes work. So what you see in front of you can sometimes be misleading, because when people apply for jobs, they think, okay, my gross salary is 30,300 euro, and they think, oh, 30,300 euro, that's guaranteed to go into my account. It's not. First of all, the government likes to take its share. So remember what we did? We worked out the gross tax. Okay, we worked out the gross tax first of all, which is basically the rate of tax you pay at a certain level. So in Ireland, the standard rate of tax is 21%. Once you get out your gross tax, you then work out your deductions from that. So everyone's entitled to reduce their tax bill depending on their circumstances. So this, in other words, is your tax credits. So once you work this out, it's called your tax payable. It's also called your net tax. Okay, once you've worked out your tax payable, you can subtract it from your salary and figure out how much money you actually get, which is called your net salary. So that should help you answer here questions 1, 2, and it should also help you answer here. Let's have a look. Yeah, it should be able to help you answer 3, 4, and 5 as well on this one. Okay, so I'll pop those questions up in Google Classroom. That'll be your work for tomorrow.